ARES, ARES Management Corporation.
Welcome to Cyberstock Reports. Today, we're going to decode the mystery behind ARES Management Corporation. And just so you know, our entire analysis today is based on data as of December 10, 2025.
And of course, the important bit up front. As you can see on screen, this is an AI-powered simulation, and it is absolutely not financial advice. You got to invest at your own risk.
Okay, so let's jump right in. Why are we talking about ARES, and why right now? Well, the immediate catalyst, the big event that's got this company in the spotlight, is its inclusion in the S&P 500.
Now, think of this as graduation day for a company, right? Getting into this exclusive club isn't just a nice headline. What it really does is force every single S&P 500 index fund and ETF out there to buy the stock. It's this massive automatic wave of buying that puts a company on a whole new level.
But honestly, that S&P inclusion, that's just the appetizer. The real story here, the heart of the bull case, is built on some seriously powerful momentum. And believe me, the numbers more than back it up.
First off, let's look at assets under management, or AUM. They're up an incredible 28% year over year. I mean, that is a huge number. It shows a massive amount of cash flowing in and a ton of trust from big-time investors. But it gets even better.
Yeah, this next number is even more impressive. Their fee-related earnings, we call it FRE, have surged by a whopping 39%. For companies like this, FRE is the holy grail. It's that stable, predictable revenue you can count on month after month that isn't tied to the wild swings of the market. This is the bedrock of their entire business, and it's not just growing, it's accelerating.
So you might be asking, where is all this growth coming from? Well, this is the crucial part. ARES is going through a fundamental change. It's shifting from being just a financial firm into an absolute infrastructure powerhouse. And it's doing this through really smart acquisitions like GCP International, positioning itself perfectly for the AI supercycle. They're not just financing the AI revolution, they're starting to own the actual physical assets that power it.
And this leads us to something we call the ARES flywheel. It's this amazing, self-reinforcing cycle of growth. Let's walk through it. It all kicks off when ARES makes a huge acquisition. That single move generates a ton of advisory fees for its partners, like Morgan Stanley. Then, that deal creates a wave of business for real estate partners like CWK and JLL. And here's the kicker. All of this increased scale and activity makes it even easier for ARES to go out and raise more money for its next big move. They are quite literally creating their own weather.
Okay, wow, that bull case is pretty compelling, right? But look, as objective researchers, we have to challenge our own thinking. We've got to play devil's advocate and look at the other side of the coin. And for ARES, that means we have to talk about valuation.
Which brings us to the big, flashing question mark of the bear case. Is all this fantastic news, all this incredible momentum, is it already baked into the stock price? In other words, is this thing priced for absolute perfection?
And the reason we have to ask that question comes down to this number, a forward price-to-earnings ratio of nearly 70. Let's just be clear about this, that is nosebleed territory. A valuation that high implies the market is expecting flawless execution and nonstop explosive growth with absolutely zero room for error.
So, a valuation like that creates what we call asymmetric risks. First, there's a very real chance of a sell the news event, where the stock drops right after the S&P inclusion hype dies down. On top of that, regulators are starting to look very closely at the whole private credit world, sometimes called shadow banking. Any new rules from bodies like the Bank of England could create some serious headwinds.
All right, so how does ARES actually stack up against the other big players in this space? To really get the full picture, we've got to put it in context. Let's do a quick peer comparison.
This table really makes it crystal clear. If you're an investor looking at this sector, you have some very distinct choices. You've got Blackstone, that's ticker BX, which is just a monster of sheer size, but it's so massive it's tough to really move the needle. Then there's Apollo, APO, which has a way more complex balance sheet. And then you have ARES, ARES, which more and more people are seeing as the agile, focused, pure play in this high-growth game.
And there's more. ARES has a major structural advantage right now. Its balance sheet is rock solid, and a big chunk of its assets are tied to floating interest rates. What does that mean? It means in today's macro environment, that acts as a natural hedge. It protects their bottom line and can even boost it. For investors today, that is a very attractive feature.
All right, we've laid out the powerful bull case, and we've looked at the very real risks in the bear case. So, where does that leave us?
How do we put all this together and come to a final verdict?
Okay, here's the synthesis. The transformation into an infrastructure juggernaut, it's real and it's working. The S&P news is the catalyst, but the real story is that incredible 39% growth in fee earnings and that pivot into AI. But, and this is a big but, that 70x valuation just cannot be ignored. It screams for caution. So what the data suggests is that this isn't a buy-at-any-price kind of stock. Instead, it looks like a prime candidate you'd want to keep on your watch list for any significant dips or pullbacks.
And to leave you with one final thought, there's a quote that just perfectly sums up the situation. ARES management has secured its moat and is actively widening it. They've built a strong, defensible position, and they're making it stronger every single day.
Finally, just one last time, please remember that this is an AI simulation. The final investment decision you make is yours and yours alone.